Hi everyone, please check the pinned comment and let's look into my micro and low time frame scenarios, starting with the first bullish Elliott Wave count on Bitcoin, where we're looking then for a wave 1, 2, 3, 4 and then a wave 5, which then ends a green wave 1 or A, followed by a 3-wave correction in a wave 2 or a wave B, which then is an expanding flat, which is a bit more rare in a wave 2 usually, but it is possible for then eventually continuation to the upside in a wave 3 or a wave C. Now this wave 2 bounced on the 0.5 because for a wave 2 the most common target area is between 0.5 and the 0.786, and as you can see it wicked into the 0.5, which is absolutely fine. And also this expanding flat for then an ABC, it hit the most common target area for a wave B, as well as the 1.618 most common target area for a wave C, and then an ABC, so that works very nicely as well. However, there is two reasons why this particular scenario for the impulse is not my preferred scenario, and actually the other one might look better. The first reason is that this wave 4 over here is very short compared to the wave 2, and usually a wave 4 is longer in time compared to wave 2, so that is something to take into account. And also if we look at the volume, and then I have to go to the 5-minute, was actually still increasing. So if we look at this to be then wave 3, usually wave 3 has the highest volume, and we did see volume increasing. But if this then is a wave 4, volume going down, and this is a wave 5, you can see that the volume in 5 is higher than in wave 3, which is not something you actually see too often, because again, usually a wave 3 has the highest amount of volume. So because of those reasons, I also changed to another scenario, which is this one, where this then is a wave 1, 2, then this is wave 3, so ending with a higher amount of volume at wave 3. This is a wave 4 expanding flat, which is the most common target area in a wave 4, and then we expect continuation to the upside in a wave 5. In this particular scenario, you don't want to see higher time frame candles close below the 0.5, which in my opinion starts with the 15-minute on the micro time frame, because on the 15 we wicked below the 0.5, closed above, went to the upside, came back again, closed right on top of the 0.5, and now we do want to see price moving to the upside, because if price is going to close candles below the 0.5 as well as wicking into the price action of wave 1, this scenario for me is invalidated. If we then look at the more bearish scenario on the micro time frame, we're actually looking at a 3-wave structure. And the reason that I thought about a 3-wave structure is that this impulse over here, yes, it can be a leading diagonal, but it could also be like a 3-wave structure in an ABC or a WXY type of scenario, then a 3-wave in here, and then another 3-wave in here. So they have a 3, 3, 3, which then is a W. An X axis can be very short. This would be incredibly short though, so it's quite an alternative at the moment. And then eventually we're looking for a 3-wave structure in a Y, which then is, if we go to the 5-minute, a impulse corrective structure, and then an impulse, and then a, then a wave B, and then eventually expecting a wave C to the upside, which should be an impulse. But as you can see, if we look at this wave C at the moment, price action here is ranging for a while. So wave A was quite a nice structure to the upside. You could very easily count a 5-wave structure in here with then a 3-wave structure, again the expanding flat in a wave B. But then you really want to see continuation to the upside in a wave C, where the main target area for this wave C is between the 1 and the 1.236, so basically also wicking above the levels that we made earlier. But price now has been ranging here for a very long time, which does not really support a wave C, because you do want to see a wave C being relatively equal to a wave A. So yeah, whatever is happening here on the lower time frames, it takes a very long time. And if we do look at least at the CVD divergences, we do see some bullish divergences over here. Now this is on the 5-minute time frame, so this is the range that I am talking about. And what we're looking over here for is that price is making higher lows, but it is making also lower lows on the CVD, at least between this low and the lows that we have over here, lower lows. Because if we even zoom in a little bit more, and that's actually I just spotted this right now, where we actually have a high over here. We made a lower high on price, but on the blue as well as the yellow CVD, we are making a higher high, which is a bearish divergence. So we actually have both bullish and bearish divergences playing out at the moment. The bearish divergence is played out the moment this low is taken. So lower low on price, higher low on CVD, played out if this low gets taken. And we still do have a bullish divergence between this low and all the price action that is happening over here, because you can see the yellow line where it is now is below the yellow line over here. So higher lows but lower lows on the CVD. So that is also interesting, where the main target is going to be taking this high. So basically we have both a bullish and a bearish divergence going on. The bearish divergence between this high and this high, lower high in price, higher high in CVD, this is the target, where the bullish divergence is between these lows and the higher lows, and then this is the target. So it's a bit of a mixed bag on the lower time frame, and we have to wait and see a little bit, of course, on what is going to happen with those divergences, because it could, of course, be possible that this is a wave 1 again in a 5-wave structure over here, a 1, 2, 3, 4, 5, which you can count on the 5-minute. Then this is still part of a corrective structure before then a move to the upside. So then the bearish divergences would play out, could take this low, but you don't want to see price then take this low over here, where this can then be the invalidation, not only actually for this scenario here, and then an A, B expecting C to the upside, but this can also be the invalidation for this scenario, where this then is a wave 1 again. Then we have a corrective structure in a wave 2, and then you want to see continuation to the upside in a wave 5. So you don't really want to see price go below this wick over here. Now if we then move to the low time frame count, which actually is 1 time frame higher, then we go to an impulsive structure to the downside. So here we then have a wave 1, 2, another 1, 2, and then this wave 3 in yellow is likely to be ended when it bounced right on top of the daily over here, which was one of the target boxes that I had after price moved to the through this target box over here. It moved to the other one, found support on the daily, and is now, for now at least, moving to the upside, where also this white target box can now act as resistance, as it has already done, but we can of course eventually push through. Now in this scenario, the likelihood of wave 3 being in is quite high, because we are starting to range now for a bit and seeing a little bit of a bigger range compared to the ones that we saw in this structure over here, which for me would then make it more likely we are entering wave 4 territory in this yellow count at the moment, where the minimum target has been hit, the 0.236 over here. You can see price hitting this target very nicely before then rejecting to the downside, which is brilliant. Now the most common targets for wave 4 are the 236 to the 0.5, so this area over here. And we do have some confluences in this area with naked point of controls as well. Again, the one at 28.1k, but also just above the 0.5, you have another daily naked point of control at 28.9k. So it could be possible that, just like on the micro time frame, price is going to wick above the 0.5, but then close below or on top of the 0.5 for then a continuation to the downside. But basically what we are looking for is a little bit of a longer wave 2 or wave 4 over here in time, because wave 2 was very, very short and deep. So we expect a little bit of a longer structure in a wave 4, where again the maximum target for me would be the 0.5, which is currently sitting at 28.8k, with just like the daily naked point of control right above it, for then eventually a continuation to the downside in then a wave 5 to the downside. So this is what I'm looking for. I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested, and for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.